Hey traders, it's Heather, and I just want to go over a few tickers that I'm going to be watching this week. So of course I'm going to start with SPX. It's my most traded ticker, and it being really the mother of the market, it's always good to know where it sits. So right here I've got the daily chart, and I'm just going to zoom in a little bit more so that we can get a slightly better view. So we had quite the day on Friday. We had a huge gap up and then just fell from there, which is not uncommon on non-farm payroll days. So what I do like is that it had a nice bounce off the daily 21. So that's always a good sign. I also want to, let me scrunch this down a little bit because I do want to also look at the monthly quant pivots with you. We've got the H1 sitting up at 66.11, and we have the L1 sitting down at 62.23. Now it's important to remember that it's only about 30% of the time that price actually touches the H1 and the L1, and it only closes above those levels. And since it's a monthly time frame that these quant pivots are sitting out, we're talking about a monthly close, not a daily close or even a weekly close, but a monthly close only closes outside of those levels roughly 17% of the time. So I think it's entirely possible that we hit, especially the H1, it's not that far away. Closing above it, definitely less likely. Another thing that we want to remember is that September is statistically the worst month of the year. Doesn't mean that this September will be the worst month of the year, but statistically that's what we tend to see. So I'm definitely looking for some weakness, maybe some choppiness. August tends to be pretty weak too, and while it certainly wasn't as great as June or July, it wasn't horrible. So things are still looking good for the market, so I'm not expecting anything drastic this month, barring a major catalyst, but always important to be mindful and be aware of those seasonal tendencies, just so we can kind of maybe alter our risk around it a little bit. So for me, I might want to lower my position sizes, have fewer positions open this month than I typically do, or even change up my strategies. Instead of going for much larger targets or much, higher targets, I might just use credit spreads. I might just use put credit spreads. So I'm still in a long position. I'm still, viewing the stock in a bullish way, but in a less risky way with a higher probability. So that's kind of how I like to trade September. So we'll see how this month plays out. Also remember that we are having the next Fed rate announcement in a couple of weeks. We are expecting the Fed to cut during this next round of announcements. Doesn't mean it will happen, but usually the Fed funds futures are pretty accurate. And right now it's really pointing to a rate cut. So again, we'll see what happens. If an unexpected thing happens, we should see a large move on that announcement. But if what we're expecting to see, which is really just a 1/4 point cut, if that's what ends up actually happening, probably not going to get a huge move into the market, right? Because we're already expecting it. The market's already pricing it in. All right, so that's what we've got for SPX. Also want to remember, before I leave this screen, I want to remind all of our small lot members and let you who aren't in our small lot trading room, let you know that I entered a 15 wide butterfly on SPX. It expires on Tuesday. I am targeting 65.25. That's where I have my center strike. It's a 15 wide, so that means that my first long strike is at 65.05. Now, why did I choose that bullish position? Well, for one thing, the almanac is showing next week to be very bullish. Tuesday, Wednesday, and Thursday are going to be if those stats play out, should be very bullish. And I think that it would be a natural move for the market to, especially after we had this nice little bounce off of the daily 21. I think it makes sense that the market wants to still resume an upward move. Here's the thing though. So Wednesday we have PPI, really important data point. Thursday we have CPI, even more important, right? So a lot of times what we see happen right ahead, right before those big economic data points, what we often see is that the price of SPX will settle into kind of like a neutral place or like a psychological level, like 6,500, and it'll just kind of stay there right before that announcement is made. It kind of, gets into position where it can move one way or another if something big with that data comes out. If that makes sense. I hope I'm not rambling too much, but if I am, here we go. So anyways, targeting 65.25, which is really just a move back up into those highs that we saw on Friday, but I do think we might settle down at 6,500 for the close on Tuesday. So why did I choose 65.25 as my center strike? Well, I think we could make it up there, and choosing a butterfly where the center strike is a little bit further away is going to make my cost cheaper, right? So I'm not planning on holding until the very end of Tuesday, although I might, we'll see. But that's not really my plan. My plan, if price goes in the direction that I want it to, is to close out the first half for a double, making the overall trade a free trade. So even if I let it go, price closed outside of my wings, I would break even. It wouldn't cost me anything. Now, of course, I do want to make something, but that's worst case scenario if price goes in my direction. If price continues in there, I will try to get a little bit more. But that's why I chose 65.25 instead of 6,500. I might still open up a 6,500 butterfly on Tuesday for Tuesday, but of course that's going to depend on what price does that actual day. But that's why I went a little bit further out than 6,500, just to kind of lower my debit. I think that because price is below those wings right now, as long as it makes a move up there, I should be able to get a double. And that's really what I'm shooting for. All right, that was a lot for one ticker, so I am going to move on. I'm just going to show you QQQ really quick. And I want to point out that the Qs have entered into a daily squeeze. We just had one day so far on Friday, assuming that price opens up in the same area on Monday, we should get a second dot right here. And then if we do want to look at those quant pivots for QQQ on the monthly time frame, we have 588 for the H1, and then we have way down here 542 for the L1. All right, let's talk about the tickers that I actually want to look at this week, the ones that I'm keeping on my watch list as a possible entry into a trade. So this first one is Netflix. So we had, wow, what a move that was off of those April lows. And then just ahead of earnings, saw a bit of a price dip right to that daily 21. Remember when I was talking about how sometimes before an important event, price will settle into a neutral area? That's what Netflix did. And it was probably a good thing because investors did not like what they heard during that earnings report, and so price fell even lower. But it has reclaimed the daily 21 and has been kind of consolidating in this area. And this is what I really like about this chart. So let's see. So in addition to the fact that it is in a squeeze, we've got 3 dots now, 3 days on this daily squeeze. It also has a weekly squeeze. That's interesting. But then if we go up here, look at the structure of price. we've got this really nice kind of cup and handle pattern forming right here. That's really, really bullish. So what I might do, assuming that price can still kind of stay in this range, is enter in a trade where I'm going to be targeting $1,300, which is right where that tree line is. So really like Netflix right now. All right, the next one that I want to look at is DoorDash. So this is another one that we were just in August in our small lot trading room. And once again, we have a daily squeeze. It started out in a low compression squeeze. Now, if you don't have the Squeeze Pro, this is what's important to know about what's different from the Squeeze Pro than the regular TTM squeeze. Squeeze Pro is going to show you these black dots. That is a heads up. That's saying get ready because it looks like this thing is about to get into the OG squeeze, a regular squeeze. And sure enough, that's exactly what happened. We have 1 day of this very fresh squeeze. Hopefully we can get a few more before it takes off. But look, once again, beautiful, beautiful, beautiful cup and handle pattern forming. So I wouldn't mind getting into Dash again and then targeting that tree line right up at 270. What I like about that target is not only can a tree line act as a magnet, but it's not even at those recent highs. So it should be able to get there fairly easily, especially with that daily squeeze. All right, next one. Okay, so this is one that I probably won't get in because John already is in this with our small lot group. But I just want to point it out because I think it's such a pretty pattern. I actually got into it on the same day that John did. We had this move right here, which was not fun. Nice little, I mean, it was looking great and then just had a nice little drop. But you know what? It's stabilized. We are, it did reclaim the daily 21, but look at this squeeze down here. This thing looks like it is ready to go. So if you're not already in Rocket Lab, take a look at it. I really like the way that it looks. Finally, the last one that I want to show you is Shopify. We have a daily squeeze starting to set up. But look at those black dots. That's exactly what I was talking about before. That is the low compression squeeze. That's saying, hey, look at me, pay attention. I am gearing up to get into an actual OG squeeze. So I'm going to continue watching this. Now, if you look at where price is right now within the Keltner channels, it is above the daily 21, but it's above the +1 ATR. So I wouldn't pick it up here. What I would love to see is for price to come down just a little bit so that it can develop that daily squeeze that I'm looking for. Give it a few days to kind of marinate, hang out in that area, build up some energy so that boom, it can fire long. That's what I'm going to be watching for. Now, all of those tickers that I just told you about with those targets, I'm not necessarily expecting them to hit those targets this week. I'm just watching these tickers this week as a place to enter. I don't expect them to necessarily hit those targets this week. So that's what I'm going to be watching. Hopefully it all works out. Hopefully we can get some good setups. I know that we'll get some good setups. If it's not with these tickers, we're going to find something else because there's always great things to trade. There are always so many opportunities in the market. Gives us a ton of opportunities every single day. If you want to join us in the small lot, I'm going to put a link down in the caption below where you can try us out for 30 days for only $7. So if you're not already in there, we'd love to have you join us. We have a lot of fun. You can come see how we trade, see what we trade, and you can trade along with us if you'd like. So look for that link in the caption below, and you have a great week. Thanks so much.